Welcome back to the Dividend Diplomats YouTube channel. You got Bert the Herd over there in his family room and living room, and you got your boy Big L, and we can't wait to talk to you about a big dividend stock watch list.
You know the drill. Before we dive in, smash that subscribe button. Give us a thumbs up if you don't follow along. We've appreciated all your love and support so far over the last year as we've grown our YouTube channel. That's exactly what we look like every time we get a new subscriber on our channel. That's right, Lanny. So everybody, please do so if you haven't done it already. We can't wait to talk to you about the not one, not two, but 3 stocks to buy from our dividend watch list.
So Bert and I, we always come out with the watch list at the beginning or before the end of the previous month. We came out with that a few weeks ago, but the market has crushed green over the last couple of weeks. And Bert, tell me, hasn't it just continued to set record highs?
Yeah, it sucks. I'm trying to buy some stocks here. I'm trying to buy some undervalued stocks, and nothing's more discouraging than getting ready to buy a company the next day, logging into your brokerage account and just seeing everything green, everything up 2%, everything up 3%. It's not fun. Yeah, we'll put the chart up here. It's insane how much the S&P 500 continues to climb.
And Bert, to bring a little bit of frame of reference, we always say that the S&P is trading at a price to earnings, which is the overall S&P 500 over that earnings of the index at 35 times earnings. Well, as of March 12th, close of business, the S&P is trading at 40.
That's insane. That's insane. So finally crossed 40, huh? After all of this, that's absolutely insane.
Let's just say we're in tech bubble danger territory here.
Yeah.
But
you know what though? That's not going to stop us from trying to find undervalued dividend growth stocks to buy. You think we're scared of that? No, screw that. We're going to keep going. I don't care how high the PE ratio for the S&P 500 is because
Bert's just going to keep buying.
Yeah, screw it. Why not? We got to buy that income.
So Bert, how do the dividend diplomats find those undervalued dividend stocks?
We take out a shovel, we go to the backyard and we start digging, and we look through 3 metrics. We look through the PE ratio being less than the S&P 500, dividend payout ratio less than 60%, although our ideal perfect payout ratio is 40 to 60%. And third, we look at the dividend growth history, where we look at their 5-year average growth rate, and we look at how long they've increased their dividend for. So that's what we look at when we start performing these analyses. We also talk about the dividend yield, but that's the bonus metric on the side after a company passes the first 3.
Searching for undervalued dividend stocks using these stock screening metrics, it's almost becoming as difficult as finding 1 pack of Pokemon cards at your local Target or Walmart. You just can't find them anywhere unless you look hard enough or go back into that store, the stock market.
Or unless you buy 30 boxes of Cinnamon Toast Crunch, and then you might be able to get some Pokemon cards.
Or you steal the children's Happy Meals. Say, give me that. That's mine.
Yeah.
But Bert and I, as always, we have found, as of the end of business on March 12th, 3 undervalued dividend stocks that we think are primed to be on your stocks to buy list for the remainder of March and maybe going into April. And 2 of them may even be dividend aristocrats on this list, Bert.
And what's cool about these 3 companies are we own all 3 of these companies already. They are already stocks in our portfolio. So if we do decide to buy these companies, then guess what? We're not buying a new position. We can keep growing our income from a stock, because it's just sometimes nice to just keep building a position on a company you already own. We don't want to add another line to our tracking spreadsheet.
And, we like to buy and search for undervalued dividend stocks that we know are going to survive and have stood the test of time through the crisis, through the tech burst, through the financial crisis, the global pandemic, and even other problems that we've had in the past. And all 3 of these companies really have stood that test, Bert. Without further ado, though, do you want to jump into that first dividend king?
This is one of our favorite companies. I think, Laney, would you say that this is our favorite dividend stock, the cream of the crop of dividend growth stocks?
Cream always rises, and J&J, Johnson & Johnson, is that first dividend stock on our watch list. They could always be the best dividend aristocrat out there. And Bert, what list are they always on?
They're always on our top 5 foundation stocks for your portfolio because they have the history of increasing. They've increased their dividend for 58 consecutive years. That's right. That's a dividend king, everybody. They have a strong dividend growth rate too. I'm kind of going backwards here on our dividend stock screener, but they have a 5-year average dividend growth rate of 5.22%. They were one of the companies that still increased that dividend right at the beginning of the pandemic last year, which think back to last year and how rare that was when companies were cutting left and right. Johnson & Johnson was like, yeah, no thanks. I think we're good. We're going to keep increasing it.
In the words of cousin Eddie, she's a beaut clock.
She is, and that payout PE ratio is always great. Their price at the time of this analysis is 159.60. Forward earnings are $9.51 per share. It's PE ratio of 16.8 right there. Not the cheapest of the stocks, but hey, that's well below that 40 PE ratio. And what's cool about J&J, Lanny, correct me if I'm wrong here, their PE ratio just always seems to be in this like high teens range. It's rarely higher and it's rarely lower.
Bert, I may have to talk to you after this. This could be that dividend stock I was talking to you about that maybe you should be buying every Monday.
You ruined the surprise where I was going with that, Lanny.
Shut up.
Yep. Yeah, that's where I was going with that. So
guys, this is live. This is not even planned. So Bert, let me hear this.
yeah, we were talking about how I need to emulate Lanny's Vanguard high dividend yield strategy there. As I was prepping for the video, I didn't want to buy the high dividend yield. So I was thinking about starting once per week every Monday, buying one share of Johnson & Johnson for my portfolio and my wife's portfolio to start consistently building that position. Yeah, I was about to throw that in after we got through all of our metrics, but Lanny walked right into that. So yeah, surprise, Lanny.
Hogan's doing right now.
Yeah. Yeah.
Wow.
Yep, you got Lanny's live reaction right there. So let's move through this next metric here, the final one. Since I did do this backwards, everybody, the dividend payout ratio is 42% with their annual dividend of 4.04. So hey, perfect payout ratio. And come April, I am fully expecting this company to continue increasing their dividend.
The perfect J&J, first dividend stock on the watch list.
Yeah.
Below 17 price to earnings, above a 2.5% yield. 5+6% dividend growth rate with the perfect payout ratio. Bert, I am happy for you right now.
Thank you. Can't wait to start adding on Monday. This is going to be great. We'll see it. Like fun to see this position grow.
Now let's jump into Dividend Aristocrat number 2 that's on this dividend stocks to buy list that we just put together. And we're going back to the golden era, the founder of the light bulb, Mr. Thomas Edison. Bert, what's this company's name and their ticker?
Consolidated Edison, ticker symbol ED. And guess what list they are also on, in addition to Johnson & Johnson, our top 5 foundation dividend stock list. How cool is that? 2 of the 3 companies on this video are considered our top 5 foundation stocks. So yeah, who says there isn't value out there in the market?
Now, in the words of Warren Buffett, price is what you pay, Bert. The value is what you get. And that's what Con Ed is bringing to the table. Yeah. They're always stock to look at, especially if they ever drop below 70. You always have your eyebrow raised, the rock style, when you see that happen. Right now, they're trading at a little bit under $71 per share with the forward earnings of $4.27 from the analysts. Based on that, the price to earnings at just under 17, actually very close to Johnson & Johnson at 16.6 times earnings. And Bert, based on that forward annual dividend of $3.10, what is that payout ratio currently?
Just over 72%. However, they're a utility company. Utilities typically pay out a higher percentage of their earnings in the form of dividends. And quite frankly, 72% is on the lower end of the spectrum for utility companies. So I'm not really that concerned here for Consolidated Edison, to be honest with you.
That 5-year dividend growth rate on average, after paying an increasing dividend for over 46 plus years, it's 3.22%. So they're like a fixed income investment. It's going to grow at almost 1 to 2 times inflation. So you put that up with that dividend yield that currently is at 4.37%. You're looking at an almost 8% overall factor from Con Ed.
Yep, fantastic. So as Lanny said, as long as Con Ed's around $70 per share, it's going to be on our watch list.
That was Con Ed, ticker symbol ED. All right, so that was 2 dividend stocks. We've gone over J&J and Con Ed, ticker symbol ED. Bert, you got to intro this 3rd dividend stock. We've talked about them so many times recently.
It's because their price won't move and they continue to show signs of undervaluation. So heck yeah, we're going to keep them on our watch list. That company,
Yeah,
Verizon, ticker symbol VZ. This has been one of the stocks we've just been gobbling up over the last 4 months, right? We tip Buffett off. I mean, we've told you this story plenty of times, right? Like, you don't need to know much, but the company is currently trading at 55.63. Forward earnings are $5.07. That's a P ratio of just under 11. So yeah, it's clearly trading at a discount to the market. Clearly.
their overall dividend that they pay right now is $2.51. So you already know if they paid just over 5, or their earnings are just over 5 from expectations, they pay 2.5. You know that dividend payout ratio is right around that 49 to 50%. Again, in that sweet spot of
Yeah.
40 to 50%. So you've got to love that payout ratio from Verizon right now.
And they don't have the highest dividend growth rate. It's better than AT&T's. It's their 5-year dividend growth rate average is 2.19%. They've increased that dividend for over 15 consecutive years. So they're less than a decade away from becoming a dividend aristocrat, which is a pretty cool thing to see happening.
Yeah, I mean, AT&T, got to take note here. Let me get that pen and paper out for you. They increase their dividend, even if it's 2%. Come on, come on.
Come on. Yeah.
Come on.
That's the best Italian impression you're going to get out of me in these videos. So
But Verizon is the big leader in 5G. They were the leader in the 5G auction. Obviously, they're trying to be a little bit of a tech side of things right now. Their fiber obviously is lightning fast. Verizon always is there. You're always going to use your phone using data. That is what we are currently built on right now.
Yep, it's perfect. So, hey, it's a solid third company on our list. So just to summarize here, we have Johnson & Johnson, PE ratio below 17, payout ratio of 42%, Dividend King with a yield of 2.5%, Consolidated Edison, an aristocrat, with a PE ratio of also right below 17 with a 72% payout ratio, a nice little over 3% 5-year growth rate, and a yield of 4.4%. Verizon, rounding it out, P ratio just under 11, payout ratio of under 50%, perfect. 5-year growth rate 2.2%, 16 years of dividend growth, and a nice 4.5% dividend yield.
I mean, here are 3 undervalued dividend stocks that's going to be on Bert and my watch list right now here in the middle of March. We each own all 3 of these, either in ours or our wife's portfolio. We own them. So we put the money where our mouth is. Again, right now in this overall, breaking record from an all-time high in the stock market, it is hard to find undervalued dividend stocks. But hopefully with Bert and I here, we are giving you some sort of help in finding at least consecutively 3 undervalued dividend stocks to potentially buy out there.
Couldn't have said it better myself, Laney. So please let us know in the comment section, what stocks are you watching? Are you looking at these 3, or what else is on your radar? We're curious. We want to know. We're excited. Please help us find more undervalued dividend stocks in this market. Don't stop searching for them because they are out there.
Don't stop believing. That's going to be the one time you may hear me sing. But again, thank you again for stopping by our channel. Give us a thumbs up if you liked our video. Subscribe if you haven't already so you don't miss a beat from the DD. Again, this is Bert and Laney from the Dividend Diplomats.
Over and out.